Welcome to Premium Cashflow Real Estate Investing Podcast with SK015. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, SK015, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, SK015.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of welcoming Adam Adams. Welcome to the show, Adam. I appreciate you taking time today.
Thank you, Skar.
Awesome. So Adam is with Real Spruce Holdings, and he's done several multifamily deals. His background starts way back in 2005, and he's done more than 5 syndications so far, raised just over $8 million actually. And today we are going to dig into his story, and he's got some fascinating tips which are applicable right today as to how we do digital marketing, use social media, and things of that nature. So I appreciate you taking time today, Adam. Welcome to the show. Please give us a background. Pretty much, that's where we get started. Tell us how you came around. What was your real estate background like?
Awesome. I will share that. And first off, just really thanks for having me. And one thing is, whatever we talk about today, whatever we talk about social media, whatever we talk about branding, whatever we talk about like growing your business or writing copy, it's not the normal things that you hear. I just want to make sure that people that are like, oh, I get it, I've done copy, I don't want to do social media, will absolutely be giving you a twist today, because the things we do are so unique. They put our meetup group, my meetup group, in the top 1% of 1% of 1%. So I have a world famous meetup. It's top 6 out of 225,000. So just when we give you these strategies, it's not going to be what just the top 1% are doing. It's like we're going to give you what the top 1% of 1% are doing. So it's
awesome.
Strange, unique things. So where did I get started? I am from Utah.
Mm-hmm.
And I grew up with a father who was my stepdad. He was always in real estate. So like when my mom met him, right? I remember he already had a 4-plex the day that we met him, and he was, or I think maybe it was a duplex. Forgive me.
Right.
He had a duplex the day we met him, and a bunch of land everywhere, because he used to do something called tax deeds. So that's just how I grew up, right? I grew up with a dad who was a contractor who put all of his extra money somewhere else. And that's really what I teach too. I make the most amount of active money you can and just get it working for you. Get it out and passive until you don't have to do the active anymore, and you can let the passive go into more passive. But I learned this from my dad. And in 2005, you already mentioned that, I was in university, and I was going to school for music education. So I used to write symphonies when I was a young kid, and it was my big passion. It was my big love. I just wanted to teach people how to do that, and now I teach people more like real estate stuff. But
awesome. From music to real estate.
Yeah. Well, okay. So it was 2005. I bought a piece of land because my dad basically made me buy it, here I was, like, almost about to graduate with my music education degree, and I sold that 2 years later in 2007, and I made a stupid return. Like, it was 8,333% on my money.
Wow.
And, I'm not doing that these days. I wish I could continue.
But by the way, that was good time to exit, because we all know what happened right after.
Yes, you are absolutely right. So all of a sudden I'm like, wow, I only put in, a few $100. I made several $1,000s, and so there's a lot of power to this. So I said, I'm going to do what my dad does, and I'm going to get into real estate. So 2007, made a bunch of money off of just a piece of land that I held on to for 2 years. And that was really what got me thinking about real estate. That was really what got me deciding that this is what I needed to do. And so that year in 2007, I said, I don't want to keep going to school for music ed. So I graduated with an education degree, but I would have had to take a lot of extra music history classes. So I pulled out. And so that's kind of like where it all started. And I read the book Rich Dad Poor Dad, but not until after I did that.
Right.
So I read that, and then I'm a big proponent of do what people do, not necessarily what they tell you. So Robert Kiyosaki kind of was saying, get into single family. This is how you flip. This is a rental is good. Cash flow is good. Right. This is what he was teaching, how to get people started into real estate. But then when I started actually studying him, he never did single family. Like he literally had been doing syndication since the beginning.
Absolutely.
And so I was like, so he never had a single family rental, but he's like teaching people how. But like what he really did was this, and he's super wealthy and famous. So that was when I decided I got to get into multifamily. So just like to kind of bring the story all the way through, it was 2007 that I started managing property for a year. And then 2008, yes, right before the crash hit me, I bought my first multifamily, just a small multifamily, and I kind of did what they call house hacking. I lived in the multifamily. I had tenants that lived in the other units, and they more than paid for my mortgage. So that was really my first step toward it, managing it, then owning it, and then several years later, we're talking 2017, is when I said, you know what? Instead of just owning like real estate, like small multifamilies, I'm going to start syndicating bigger ones because I just felt like we needed to scale. So that's where we got started was 2017. And you mentioned it before. We've raised about $8 million and with our partners and closed on. So far 770 units, and we're just trying to keep growing and manage the assets as best as we can.
Awesome. And one thing I love about your story there, Adam, is that I think your dad motivating you to do something, and you bought the first land. I mean, I cannot tell you enough how unique that is, because as we all know, many a times it is our friends or family that is saying, oh, don't do this, don't do that. Oh, they lost so much money and all that. So that fear of taking the risk or going to that next level. But here you are as an exception who comes out, boom, buys land, and at a ridiculous profit, you exit out of it. There's nothing like, having the first deal propel you forward. That's awesome. And that's got to be a unique story by itself, because, as I said, having that family support behind you that propels you forward, I think that's going to get you through a lot of tough times as well, which is incredible. I love it, actually. So tell us, Adam, how you came about, what was your first deal like how many units, what were your sort of takeaways from it? How many units was that?
The first syndication.
Sure. Yeah.
In 17. Okay. All right. So that is, we still own it. It's 16 units, right? $1.2 million. So the first thing that I'll mention is something that is valuable to anyone listening or getting into the business. And it just think about the purchase price is very, very important. Okay.
Right.
If I buy this at 1.2, and if I get an 80-20 loan, what that is technically meaning is I have a 960 loan, which means that it's under $1 million, which means that I have to have a recourse loan. So just the first learning lesson today is you shouldn't have a recourse loan. There's no reason to do it. Sure. Bigger is better. So we made that mistake. We bought a smaller property. We had a recourse loan. We signed on the loan. Go ahead.
I was just going to say that for our young listeners who may not understand the technicalities of what a recourse loan versus non-recourse is. So give us in 10 seconds what
Okay.
exactly is that?
Yeah, well, this isn't a perfect, definition, but
Sure.
the difference is, if it's recourse, that means if something bad happens at the property, they're gonna take the property and they're gonna go after me because I signed
Sure.
on the loan.
Hmm.
On a non-recourse loan, it's a little bit different. They're gonna take over the property, but they don't have recourse to go after me personally. They just
Absolutely.
they secure the property and they're done.
Absolutely. And discounting some other visa clauses where, there's no fraud and things like that.
Yeah.
Non-recourse typically is hands off. So go ahead. So go ahead with what you're saying with the thought.
Okay, so we purchased a 1.2 property. Loan was 960, and which means it was recourse. And it's a smaller property. It's in Bridgeport, Connecticut, and Bridgeport, Connecticut is very far away from Denver. If you're watching the video,
I
you've
was
got
going to say,
Denver
absolutely.
behind me.
Yeah.
So, and it's also a state where it's not landlord friendly.
Right.
So, we learned a lot on that first deal. So the second thing to learn from this, if you're new and you're getting into it, is that it's heavily preferred for you to purchase property in a place where it's landlord friendly versus tenant friendly. Bridgeport, Connecticut, very, very tenant friendly. And it's very close to Manhattan. So if you can kind of visualize that, it's like an 88-minute train ride to get to Manhattan.
Absolutely. A lot of people commute from there.
Yeah.
Pretty much. Yep.
Yeah. And so other cities in Connecticut are shrinking. Like as we record this anyway, I can't say 10 years from now, but right now as it goes, there's net out migration. Okay. So the net of Connecticut is people moving out. There is one city where it's a net positive migration. That's the only reason why we chose to go ahead and buy that one.
Mm-hmm. Mm-hmm.
Is Bridgeport. Okay, so it's
see.
because we have two universities right there. There's a lot of gentrification, and it's super, super close comparatively to be able to get to Manhattan and be able to work. Like you said, people are commuting.
Right.
So that's kind of the market that we're looking at. The property itself, when we purchased it, what we liked about it is that our rents were around 800. It's been a year and a day since we closed on that one.
Mm-hmm.
And I don't remember specifically, but it was either 860 per unit or 890 per unit, but it was just under 900.
Right.
And market is 1100. So
wow.
So it is, we felt really good about that. So we went ahead and purchased it. Now that kind of just brings us into the next thing that we can learn from this deal is it was so small that we can't hire like a big company to manage it.
Absolutely.
And we shouldn't have somebody on site.
There's no economies of scale like that.
Yes.
For sure. Right.
Okay. Absolutely. So here's what happened bad to us as a result of not having those things. We had a property manager that we took over. They used to manage the property for the other owner. Right. And they became our employee. We ended up hiring them as an employee, mm-hmm. And they would manage our properties. Now, they didn't do a lot of their reporting is bad or was bad. We fired them. Mm-hmm. Their reporting was bad or terrible, and the worst thing about it is like when they hired and they became a project manager because it wasn't a nice big company that you can hire, right? They allowed or maybe didn't pay attention to the handyman coming into the unit and saying, you've got mold in the bathroom. Oh. And so what you should do, hopefully everybody knows this, is you should rip out all of the mold.
Sure.
You should treat all the studs. Absolutely. And then you rebuild it new, right?
Correct.
That's the normal way. So what they did is they actually put drywall over top of of moldy drywall, just screwed it in, repainted it, and created more of a problem. And we didn't find this out until after we fired them. And so there was some issues. There was some issues for us to, like all of a sudden cash flow's gone. They weren't paying all of the utility bills. So our new manager took over, and day one, there's a notice on the door that says, we're going to shut off your water because you haven't paid in some time.
Mm-hmm.
And so we're getting over all of this. We're fixing all this. She was our manager for 7 months,
Mm-hmm.
and we closed it just over a year ago. So right now we are working on making sure that we can get this property really to turn around the right way. This property manager charges more than the old property manager because he's doing a great job.
I know.
So that's a little bit of.
Yep.
Go ahead.
I was just going to say that, Adam, is that I think doing it the right way, as you rightfully said there, is an absolutely a way to go in these kind of things. Like when there's water and old type of construction, you don't want to mess with it. You want to probably go to the gold standard where you're removing all of these showers around, if that's the case here, right? I mean, use these modern cement boards as your backing. And, if you're going all the way, it's like pretty much gutting the whole bathroom, use probably that green drywall. I mean, that's what we do. We will like completely, get rid of it, have new GFIs, have the cement boards, like new tiles and things like that. I mean, all of our portfolio actually here is like all Class A renovations with this kind of stuff, because as you rightfully said, I mean, some of these buildings don't have exhaust and things of that nature. So when someone takes a bath, all those, hot water fumes build up, and slowly the water condensation just stays there. And next thing you know is you have mold in the ceiling and surround and things like that. So it's, it's a tough issue. I mean, so how are you making out now?
Yeah. So we're just kind of started the transition this quarter. And so, we were paying out pretty good on it. And then we'll probably have a couple months where it's just, it's going back to repositioning. So we are working on it. We'll have to do another interview later on it to really know where it goes. But we're anticipating like this quarter and next quarter probably keeping the cash flow with us.
Awesome.
Keeping the cash flow so we can grow.
Go through it. I know. I absolutely. I mean, these are the challenges or hidden things that sometimes don't get talked about, but I'm glad this came up. And this is one of my pet peeves where I say that you got to know the construction experience. You got to know, because once you get in and you're in that tough spot where you're trying to, raise capital, or you didn't budget for some of these things, because paint and carpet, you can fix it, but some of these inherent issues that come with was this more like a downtown C-class type of building, Adam, in your case?
It's not necessarily downtown, but
okay.
I would call it a C+ asset.
I see. And that's typically what happens is you'll see older plumbing that's clogged up, or sometimes, God forbid, you get drain pipes that are cracked and things like that. And you see these issues, predominantly in such older buildings. But let me shift gears, Adam, that I know you got started. You have been raising capital in a big way. You are using cutting edge techniques of marketing, whether it's meetups, using social media and things like that. So please take away, give us some tips as to how we can segue into it.
Oh, sure. What I would say is one of the better things about what I'm doing is I'm letting people know what I'm doing, and that I hope that just kind of resonates if you're listening right now. Doing the business is great, and you should do the business, and you should do well at the business. But the difference is there's a lot of people that are really hidden or tucked away, or they don't want anyone to know. But if you're syndicating, people have to know. People have to see you. People have to, invite you on their podcast. People have
Absolutely.
to be able to passively invest. So you need to be invited to speak places. And
right.
If you want to kind of grow that brand, if you want to kind of grow who you are as an investor in front of other investors, there's so much noise right now. There's so many different passive investors right now.
Right.
You've got to find a way to let people know what you're doing. And I prefer one of two ways to do that. I like my Facebook, my own personal Facebook, and just, you'll make posts of what you're doing, with your kids. You'll make posts of what you're doing with your meals, and you make posts of what you're doing with your work. And you'll make posts of how to add content to others, right?
Right.
So that's kind of some of what I do there. And it's not just that you post.
Right.
If you can find a way to kind of hack into the Facebook's algorithm to kind of work against it so that you can be put in front of more people, that'll be a benefit. And I can share a few tips on that.
I was just going to say that if you could go a little bit granular into what to do exactly. It's just not a mere post. Sometimes it used to be picture, but from what I understand now, you go the video route, and go into all of that, please.
Okay. Yeah, no, you're right about videos, except for one thing that needs to be really brought out. If you're like posting a YouTube link,
Mm-hmm.
That's not a video. Even though it's a video, it's not a video for these purposes. Because if you're posting a video, why Facebook likes that is if people are watching that video, it holds them on Facebook for a longer bit of time, right?
Right.
But if you're posting a YouTube, it takes people away from Facebook and puts them on YouTube. So Facebook doesn't want that. They want them to be here.
Right.
So it's good if you're posting a video, but just be cautious that you're not like just posting a link of some other video on a different site where they have to really redirect themselves to watch it.
Right. And where it, I think, matters also is that you're uploading your actual video content on YouTube, or rather, I should say Facebook. And that's where, the magic is that it's uploaded right on Facebook. So a viewer is watching it, is right there on Facebook itself. So what other techniques they should use within that?
Some of I have like a whole raising money course that really dives into branding yourself.
Right.
Which it's 13 different weeks of content. So
wow. Mm-hmm.
It'd be hard to go through all of it, but just kind of one of the things that you should know if you're wanting to get involved into this is people need to engage with the post. So that you always hear, post engagement, post interaction, keeping people on Facebook, keeping them engaged. And, the worst way to do that is to tell someone what you're doing.
Mm-hmm.
And the best way to do that to keep them engaged is to ask them questions.
Mm-hmm.
So I feel like most of the people that post tell too much and they don't ask enough. Does that make sense?
Makes sense. Makes complete sense. Like you create a post or a video and, hey, did you like it? Or what did you think about it? Or things of that nature, where I think you're asking for feedback. Is that sound about right, Adam? That's a good way. We can just think like, let's just say when you close on a deal. Okay. Mm-hmm. Mm-hmm.
Well, we're talking about growing your brand. So you want people to know that you closed on a deal.
Right. Mm-hmm.
But if you just say closed on another 100 unit, that can be good because there's going to be few people hearting it and liking it because they're like, oh, that's cool. He closed on 100 units. But you're not adding value to anyone at all. How does that help somebody?
Right.
That's literally only helps you. And when you're on Facebook or whatever, this can be used on LinkedIn. This could probably be used on any platform. But the point is, if you just post close on 100 unit, that's one thing. But if you can say, hey, if you want to know how I raised the money for this 100 unit, comment below. Can you imagine the difference?
Oh my God. Yes. Awesome. Yep.
One way you might get 100 likes, and the other way you'll get 100 comments and 300 likes.
Right. And absolutely, people are more like, please tell me about it and things like that. And does that become more like your funnel where you perhaps maybe tell people that, hey, maybe get this free report and things like that, where you're kind of taking them into that next step where you are maybe perhaps asking them like email, phone number, any type of contact information where you can, perhaps add them to your mailing list for future marketing purposes. Would that be kind of a segue where you would take them into?
Yeah, Sakar, you're going into the next level, aren't you? I love it. I love it. No, so yeah, so it's, if you're going to raise money, you need to put people on your list.
Sure.
And so, how to do that. And again, this is like really, really defined out in the course. It is a paid course, just FYI, but this is like super laid out in that. But
I see.
then we try to like just on the spot give you a little bit of content here that will be super valuable. Let's just say that you have a target audience, and for argument's sake, your target audience is the person who's going to passively invest in your deal.
Right.
All right. So that's who you want. And so now you ask yourself, what does he or she want? And what they want is, let's just say they want tax benefits. And just for argument's sake, let's say pick a thing that someone wealthy would want. They would want tax benefits. And now, so what you might be able to do is just write a paper on your website, or write something where you can have a PDF, and then you just say, hey, if you want, let me tell you, I wrote this thing of 10 tax benefits. Let me tell you 3 of them. And then you give them a good content, give them a good content, give them a good content. And then you say, hey, if you want all 10, go here, give me your email and I'll email you the PDF. Or, you can automate this stuff as well. But let's just say, give me your email and I'll literally give you the PDF of all 10. And so that way it's a short content. People are impressed. They want to work with you. They'll say, yeah, I'll take the other 10 because it applies to me.
Sure.
And then, just like you said, Sakar, you could put you could get their email, their name, and just put it in your database for potential passive investors. That's a great way to do it. And then you can remarket to them, maybe send them an email, let's just say next week, that just says, hey, I thought of an 11th way to save on taxes. And you give them 3, then you give them a 10, and then you just email them randomly a week later and say, hey, there's an 11th and 12th way that I never thought about. Let me tell you about those right here in this email. And then
awesome.
that can be a really good way to kind of just stay with them.
Awesome. I love it. So now, speaking of social media, Adam, I know you have Facebook, LinkedIn, let's say Snapchat, Instagram, and things like that, right? Could you maybe give us sort of a under the hood overview of why a LinkedIn, which is associated more in that professional realm of things, right, versus Facebook, which is like more in the social context, where probably a lot of other like household people are also involved, right? Could you maybe tell us what those sort of high level differences are, and why anybody should be across the sector of all of these mediums?
Yes, I'll do my best here to just kind of sum it up. But on LinkedIn, there's an average net worth of or income level per year of above 100,000. So that's at least that was the statistic a few months ago. The average income of somebody who's on LinkedIn is above 100,000. So that's I don't think it's the same on Facebook.
Sure.
The average on Facebook might be 40,000. So there's your first reason. If you're trying to target more of an accredited investor, or somebody who has extra liquid capital to deploy into your deal, you might be able to find them better on LinkedIn. My personal opinion is you have to be on both. My personal opinion is you need to be on both. And one of the things that is in our course, and I keep bringing it up, and it's because we're really talking about raising money. One of the things in our course really will teach you how to optimize your LinkedIn.
Sure.
So that when people see it, when people type up like syndicator, they find you. They don't find 100 other syndicators. We teach you how to make it so it's like your SEO, but for your LinkedIn. And so that's one of the cool strategies. And the other thing that is super important, at least in my opinion, with LinkedIn, is just to show people what you're doing. So if they search your name, if they Google you, I want them to find if they Google me, I want them to find my Facebook. I want them to find my LinkedIn. I'm personally not as active on LinkedIn, but that's up to the person who's doing this.
Right.
You pick one and be really active on it. You don't have to do both. I don't do both, and I raise as much money as I need to raise. But I like having a LinkedIn that's optimized where people can find me, where when they hop on there, there's a good smiling photo of me.
Mm-hmm.
There's a background photo of me. It clearly describes that I raise equity for my deals,
Mm-hmm.
so that when they go and search Adam Adams on LinkedIn, they easily know who I am. They can see.
They don't have to go that level. They can search Adam and they'll get Adam Adams. How's that? Get the 1-2 punch, right?
I love it. And the same thing on Facebook, right? So Facebook's very personal, and that's one of the biggest things that I love about Facebook
Mm-hmm.
is that I can easily comfortably share pictures of my kids working out at CrossFit, the
Mm-hmm.
CrossFit kids. I can easily share pictures of my food, and it's more of like get to know who I am, because
Sure.
when I'm raising equity,
Mm-hmm.
people invest with me, not just because we have a track record, not just because we've closed a few deals,
Sure.
but they invest with me because they like me, and they like me because they have the opportunity to get to know who I am, because I don't just share business.
Right.
On LinkedIn, just me personally, it's harder for me to show my own personality
Sure.
on LinkedIn. You can do it with videos. There's a lot of ways to do it. I'm not saying not to do it. You
Sure.
should. Always do something that other people are not doing. That's the best way to succeed.
Absolutely. I agree with you. There are more ways to be right. And as you rightfully said, that I think investors are always watching the integrity and the trust factor that you can bring in over time leads you to basically repeat investors, or investors telling their friends that, hey, listen, I've done this with Adam. Why don't you join? Or just come with me, think about, just sit, be fly on the wall. And if you like something, please join. If not, it's no big deal. It's no pressure. Would you agree?
Absolutely. Referrals are the
Huge.
number one way.
Absolutely.
You start our first deal. We talked about this a bit ago.
Right.
We only raised like 300K.
Mhm.
And so there were 7 investors. It was like averaging 50K a person.
Sure.
So on that very first deal, there was only 7. And I'll tell you, it was a struggle to close the first one with
Sure.
just 7.
How long did that take, the first money raise, by the way?
Oh my goodness. Well, just to close the deal took 9 months,
Oh,
but
my.
the raise, I think it took a couple weeks.
I
But
see.
but
But that's a good thing. That's a good thing. I'm sure you've been telling, all your network that, hey, I'm doing this. Would you like something if that comes across, something like this, which actually is a good thing that you've been looking at deals and educating investors along the way. Just the fact that you can raise 300,000 just within 2 weeks is pretty powerful, actually.
yeah, well, these days it's a lot better than that.
Oh, yeah,
So
absolutely. We're
these
talking
days
your first deal.
we
So
can raise maybe 500 or a million by doing a webinar or 2.
absolutely, I agree with
So,
you. Got it.
but okay, so that's what I think about the difference between LinkedIn and Facebook. I think you, the listener, you need to pick one, just one. Be on both. Have a Facebook profile. Have a pretty face on it with your pearly whites.
Sure.
And then, and the same thing on LinkedIn. Have one, but then just pick one where you're going to add the most of your content.
Mm-hmm.
And then use the strategies that we talked about, where you are asking questions instead of telling people things, where you're using organic downloaded videos, not just YouTube videos, where you're adding value instead of just, taking, hey, I want your email. If you want these 10 things, give me your email. I would much rather see you say, here's 3 things that are going to help you if you want all 10, and that now they're like, this person's adding good content. It's worth it for me to exchange an email for
Absolutely.
the rest of that good content.
Absolutely. Adam, I know you're a wealth of knowledge. I think we're going to do another segment where I want to dig in. I know you're one of the top meetup experts as well. So allow me to, host you on another segment where we dig in some of those details, right? So staying on that prior topic of social media, right? So there is this notion where what you have to say on Facebook regarding syndications. You have to be creative, or you have to stay in your lane correctly. Could you give us some tips for our investors as to what you can say, what you should not say on Facebook?
Yeah. So with a caveat that laws change,
Sure.
and I've never been a licensed attorney,
Sure.
but I do spend a lot of time and effort, and I have a podcast as well, and I bring on a lot of securities attorneys to be able to just kind of ask them. I want to find out what can I do, what can I not do. So that's just where this information is coming from.
Sure. Please tell our listeners what the name of your podcast, how they can locate it as well.
Yeah. So we've been running the Creative Real Estate Podcast for 2 years. And whenever they get this, they'll see in like episode 200 and something, they will see somewhere where I share one of my multifamily podcasts. I'm going to be launching a multifamily podcast pretty soon, but the Creative Real Estate Podcast, we've given so much value on that. So much awesome. Free content.
That's awesome.
Okay, so let's go right back to where we were. It was saying, Facebook. What can you say on social media?
Right.
And so, like, let me just kind of try to dissect this real fast. There's two different kinds. There's a lot more than two, but there's two main ways that you raise money legally for syndication.
Mm-hmm.
And that's Reg D as in dog, 506B as in boy. This means you go with your buddies, your friends. And then there's Reg D as in dog, 506C as in community, where you can advertise out to the city, like people that you don't necessarily know.
Sure.
Out in the community. So if you're doing a B, here's the truth. You can't put that deal on Facebook at all.
Right.
Sorry, I need a cough. Sorry, hopefully you can edit that out.
Yeah, sure.
All right. So B as in boy is with just your buddies. You cannot advertise this, even if you're trying to tell me the only people that can look at this is my personal friends. Even if you're saying every one of my personal friends have met me in person, even if you're trying to say that I've blocked it from showing it out to the community, you're going to probably get in major trouble if you do a 506B, which is what most people do. Mm-hmm. That's where you can have up to, quote, 35 non-accredited investors.
Right.
Okay. If you're doing that, you're automatically breaking the law. At least that's what the last couple of attorneys told me. Okay. Now, if you have a 506C, as in community or city, like actually blasting it out to accredit everybody, you can talk about the opportunity literally with anyone within the country, outside the country, whether they have no money, whether they're non-accredited, sophisticated, accredited, ultra wealthy. You can share it anywhere. You can share it on the back of an airplane. You can share it on Facebook. You can share it. You can create ads for that deal. Mm-hmm. You just have to make sure that the only people that actually do invest are accredited. So awesome. That's kind of the big difference there. And so you're asking, what can you share on Facebook? You want to be really, really cautious. Now, if you're doing 506B as in boys, you cannot what's called generally solicit. You can't just share this stuff out at a meetup group. I've seen a lot of people making that mistake. They go to a meetup group and they say, hey, I've got a deal. You can invest in it and I can take, don't worry, if you're not accredited, you're fine.
Right.
No, that's wrong. You cannot do that. Right. You can only do that if it's a 506C, as in being able to advertise.
Sure.
And so if you ever hear somebody say that they can have up to 35 non-accredited, if they ever say that, then you can pretty much conclude that it's a 506B.
Right.
And you can pretty much conclude that they shouldn't be talking to you about it unless they have a substantial relationship with you.
Right.
And what that means to me, and because actually every attorney is different, every different attorney that I talk to is like, well, it needs to be a 3-touch rule, or you need to have 2 phone calls, or you need to at least have lunch with them once. None of those are actually true. Mm-hmm. The most true thing that I can get a commonality from my attorneys is you have to understand their financial situation intimately. You have to understand intimate details about them. So it's something where it's not necessarily that you met them 3 times or 10 times
Sure.
or 1 time. It's not necessarily how many times you talked on the phone. But if you have knowledge of this is what they've done in real estate, this is what knowledge they have, experience that they have, this is how much money they have to put into a deal. Once you are comfortable with that, that's when your a 506B can happen. But again, consult your own attorney, because I know that out of 10 attorneys, you'll get 10 answers.
I know. This has been awesome, Adam. I appreciate it. And the most important fact in all of this is you're doing for the benefit of investors. You don't want to like come across as like, hey, you're trying to take the last dime from somebody. You're really not in the business of that. You want to make sure it's a win-win. And as you rightfully said, that you understand their financial situation. And if it's not a right fit, he's not the investor that you should really be in business with, and perhaps, God forbid, getting into trouble down the line. So please tell our listeners how they can find you, Adam.
First off, what you just said was huge. When we're talking about understanding their situation and making sure that they're not investing their last 50K with your deal is very important. So absolutely. I just how can they get a hold of me? They can just go to realbluespruce.com. That's our website for Blue Spruce Holdings. It's called Real, like real estate, blue, the color, and spruce, the tree.com. They can find my email. They can find the podcast. They can find the Raising Money Secrets. They can find everything about me there.
That's awesome. I appreciate you taking time today, Adam. I would love to have you back on a separate segment where we dig into some advanced concepts of syndication, social media, and your specialty about how we can dissect and get nitty-gritty about meetups and how we can enhance our business and get more outreach to people. Just a little bit about our podcast as well. We are premiumcashflow.com, where we are discussing with multifamily investments, how passive investors can invest money into these deals, whether that's multifamily, self-storages, manufactured home parks. We got a lot of stuff going on. Please reach out to us. The website is www.premiumcashflow.com. There is a invest with us link where you can enter your contact information, and we will contact you and set up a consultation. So it's been a pleasure, Adam. Thank you for taking time. I love to have you back on a separate segment then.
Awesome. Thank you.
Thank you, and have a good day.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.